Hello, everyone, and a happy Valentine's Day to you all. My name is Patrick Kim, and I'm the Work Comp Specialist at Beere&Purves. And today, I want to thank you all for taking the time to join me on today's webinar. So today's webinar is going to go over some changes in workers' compensation as well as the services Beere&P provides to you, our broker partners. And just so you know, this webinar is in fact recorded, so if you guys miss anything, please don't worry. We'll be sending you a link to the webinar momentarily. So let's get started. Okay, so for today's agenda today, again, I'm going to go over some of the changes in workers' compensation, and then I'm going to go over some of how workers' compensation kind of pairs nicely with some of the medical carriers you guys have probably written over the last fourth quarter or renewed. And once I go over this information, then I'll get into some details in terms of how Beere&P can expedite the work comp process for you and make everything easy. And I'll finish off with a short Q&A session. So first and foremost, for workers' compensation, in terms of market-wide, work comp continues to be in a soft market. So for the past couple of years, rates have continued their downward trend for the entire state of California. And starting in 2018, this will actually be the third straight year. Commissioner Davy Jones, he approved immediate rate decreases last year. And the 2018 year is also starting off with another approved rate decrease. Again, these are carrier-wide. So kind of the way the work comp rates work is that the Workers' Compensation Insurance Rating Bureau and the Department of Insurance come together, they talk, and they essentially say, hey, for this year or for last year, we had a good loss ratio, claims were low, our claims were being resolved very quickly. So we could probably pass on some additional savings to groups, and that's essentially what the general rate decreases is. That's essentially how it works. And so as I previously mentioned, the rate decreases are currently being attributed to the decrease in workers' compensation costs. So this is stuff like people are being out of work less, claims are again being resolved much faster, the severity of claims are being reduced, the length of claims resolutions being reduced. All of that is taken into account when considering whether or not a statewide rate decrease is warranted. And again, this is something the Work Comp Insurance Rating Bureau as well as the Department of Insurance kind of partner up together in order to make that determination. Something to note though is that some carriers might raise their rates for certain classes depending on the loss experience for the employee classifications or the carrier's financial situation. So an example might be, well, even though the Department of Insurance and the Work Comp Insurance Rating Bureau recommend a overall rate decrease, the carriers themselves have to take a look at what their own personal financial situation is and say, okay, do we have an appetite for these particular markets? Are these markets something that we can comfortably write and maintain financial stability for ourselves? That's something they always consider. Now, for some of your work comp groups, or groups in general actually, they might be receiving notices that state mandated fees are going to increase for groups with a work comp effective date of January 1st, 2018 and onward. So while some groups may experience a premium increase because, again, what happens in workers' compensation is the Department of Insurance, Work Comp Rating Bureau, they give a recommendation on what the rate should be. And carriers, they take a look at that recommendation and adjust accordingly, again, depending on the financial situation, what preferred markets they prefer to write. And then once they calculate that, the state also again steps in and says, okay, well, we also need to collect state mandated taxes and fees. And this is stuff that's meant to cover an unemployed insurers fund. Essentially, any group that does not have workers' compensation gets caught, well, those employees still need coverage, and they also need their claims paid out. So the state charges from all the carriers in California, the Department of Insurance charges a couple taxes and fees onto all work comp premiums in order to fund the unemployed insurers fund. Again, this is just to provide services to those groups that do not have work comp, that are supposed to have work comp, but again, it's to make sure that the employees are taken care of regardless of whether or not the employer is fulfilling their obligations or not. So moving on, some groups might experience a premium increase. Now the fee increase is probably going to be most notable for minimum premium groups. So these might be groups with a annual premium of a couple $100 or so. Since these groups are being charged the lowest premiums possible, they're going to notice the premium increase, and the rate decreases might not necessarily offset the fee increase, because for workers' compensation, generally speaking, all carriers charge a minimum premium amount. And this is so that if the group incurs a claim, the group can pay, already has paid enough premiums in order to cover most common claims, something like hurt your back, hurt your wrist, et cetera, et cetera. It's not really meant to cover catastrophic claims like fatality, but again, the idea is that it's supposed to help mitigate the loss, a negative loss for a group. So for employers' compensation, as a carrier, they still prefer their white-collar groups, and these are law offices, doctor offices, and such. But they will still entertain some manufacturing groups. Something to consider when submitting a manufacturing group, though, is that they're very tightly underwritten. So typically, the carrier will in fact request additional information regarding the detailed operations for the group. What sort of materials they work with, how big are the finished work products, does the group utilize any sort of safety program like a tag and lockout program for all their equipment. Now, however, despite the underwriting difficulties, these are still very lucrative groups, especially with employers' work comp, because manufacturing groups tend to have higher premiums, which means more commissions for you brokers. And because employers is likely to have competitive rates for these kind of groups and be more flexible, and they're a lot more flexible when trying to apply credits to win over these groups. So in comparison to some of the other carriers, employers might be a bit challenging to get into, but once they're written, the group gets to benefit from some pretty dramatically reduced premiums. Now, employers still offers their 10% discount program. So any group that is cross-sold with Anthem Blue Cross and employers work comp gets a 10% discount. Just be advised that a little while ago, employers and Anthem Blue Cross were marketing an integrated billing, which means that if the group again was cross-sold Anthem Blue Cross Medical and employers work comp, the group could just pay everything like their work comp bill and their medical bill on the Anthem Blue Cross bill. That program has unfortunately been dissolved. So when groups do utilize this 10% discount for the work comp, they will be billed directly by the Anthem carrier for the medical, and they'll be billed directly by employers' workers' compensation for their work comp piece. And also payments have to be remitted to the respective carrier as well. Now, employer also offers an easy auto payment option where groups just need to go in, create an online account in the employer's work comp portal. It's called e-access. The group just needs to submit their banking info, and the carrier will automatically withdraw payments. Just be advised that all payment options for employers is free, so it doesn't matter if you sign up for the auto pay or make online payments. All payment options are free. However, we do recommend utilizing the easy online auto payment option because it protects against any accidental lapses in coverage or cancellations just because the group forgot to make a payment or made a short payment. Now, for the fourth quarter last year, Anthem Blue Cross and UHC had a pretty strong showing with competitive rates. So for those of you that are sitting on a lot of Anthem UHC groups, work comp is a great line of coverage to add for additional revenue during the slow season until we hit the fourth quarter again. So UHC and work comp. UHC matches with work comp because it still offers its ACEC program. So for those of you that might not know, UHC has a special program where if a group is a member of the American Council of Engineers, they get special rates and benefits if they're sold with UHC. And the reason this pairs with work comp is because typically engineering groups are favored by work comp carriers since these kinds of groups have high payrolls, which means high premiums, and generally have favorable X mods, which is a work comp REF, and a pretty safe work history. Another consideration is that UHC is going to offer another program that works similar like ACEC, which will be the Restaurant and Hospitality Association Benefit Trust. So groups that are members of the National Restaurant Association or the California Restaurant Association are typically part of industries that work comp carriers will very gladly write. These are hotels, restaurants, bakeries, such and such. Now, something to note is that UHC's California Restaurant Association portion pairs nicely with employers' own California Restaurant Association program. So employers offers a 5% discount on work comp groups that are California Restaurant Association members and get sold in employers' work comp policy. Also, qualified new California Restaurant Association members are charged $99 per location when they are covered by the employer's work comp. So if you have a group that wants to take advantage of the UHC's new, at least the California Restaurant Association program, it's a good idea to see if the group also wants to take advantage of the employer's California Restaurant Association program as well. In fact, if you have a restaurant group, you can educate them about the UHC CRA program and the employer's work comp program as well. And the group gets the medical and the work comp savings, and you just got 2 lines of coverage all at once. So again, as I mentioned previously, Anthem employers still offer their integrated discount for any group that's cross-sold any Anthem medical product and employers work comp. And again, the group gets a 10% discount on the work comp piece. Really, this is a fantastic option for startup groups with Anthem Blue Cross because Anthem has generally favorable underwriting guidelines for startup groups. And of course, any business in California is going to need work comp. So this is something that can pair nicely together. So if you have a startup group and they have an employee, you can get the Anthem Blue Cross piece and as well as get the work comp piece as well. And the group gets to have some savings on their work comp as well. So for some brand new news, a particularly exciting piece of news actually is that Beere&Purves can now offer travelers workers' compensation. So to start off, Travelers has a pretty broad market appetite, and just like any average work comp carrier, they still prefer the white collar groups, but they'll also accept a little more blue collar groups than, let's say, employers might. So this is an option for those groups that employers or some other carrier that heavily favors white collar groups that they might not be able to write but still need coverage. So just something to know is that even though Travelers will accept some artisan class codes and blue collar groups, plumbers, HVAC installers, et cetera, that doesn't mean we can go prospecting everyone and anyone. We still have to be aware about any issues on the group like frequent claims, reasons for losses in coverage. In those situations, just reach out to me and we can have a conversation in terms of what might be the best path for the group. And another, I guess, boon about Travelers is that they provide a claim concierge service. And the way this works is that there are nurses in the United States that are associated with Travelers in medical centers across the US. So if an injured member goes in and says they have a work comp claim injury, provide the Traveler's policy number, they will get treated by a Traveler's associated nurse, and the majority of the background work on the member side is completed by the nurse. And this is stuff like reporting the claim, keeping the member updated, and actually filling out the claim form for the member. Now, even though, just be advised that this service is heavily member-oriented, it's meant to support the member. The employer still needs to satisfy their obligations to state and OSHA. But again, on the member level, the paperwork gets taken care of. There's no confusion when and if a member gets billed. And again, the staff member can just return to work earlier because they don't have to worry about all the headaches about paperwork. Did they fill in this? Did they dot the I's and cross the T's? Now, Travelers also offers a program called TravPay, which works where the employer submits payroll to the carrier on a regular basis, and then premiums are generated based on the payroll information and then deducted from the group automatically. So for workers' compensation, premiums are generated based upon payroll, and payroll, of course, can fluctuate. Well, I guess it depends on the group, but it can change dramatically, particularly for a startup, because as they grow, the payroll is going to need to change. And it can be inconvenient for groups to have to either call their agent or call the carrier and say, hey, I need to update my payroll again so I can update my premiums. With TravPay, what the group does is they submit their payroll information on a biweekly basis. The carrier will take a look at the information, generate invoice based upon the exact payroll information that was submitted, and automatically deduct payment from the group's account. This keeps on top of the group so that updates are made on the fly. It also allows for a little more budget flexibility because the group's not having to worry about, oh, at the end of the year, is there going to be a dramatic catch-up balance or is there going to be a dramatic refund balance? It's going to be as precise as possible. Another nice utility about this is that there's no down payment needed. So for workers' compensation on a normal billing plan, typically the carrier's first invoice will say, okay, here's your normal work comp premium plus XYZ percentage of a down payment. With the TravPay, there's no down payment needed. The group just needs to submit their information and then premiums can be generated and deducted right off the bat. Just be advised that the carrier, this option might not be attractive for all groups. Some of them might say, well, why do I have to submit my information to the carrier directly? Why can't I just do it through my payroll company? Travelers will work with a number of payroll vendors so that travelers can just get the group's information, reach out to the payroll vendor, and the payroll vendor and the travelers carrier TravPay team, they'll work together in order to generate and deduct premiums as is necessary. So these are just some of the Beere&P services. Really, all the services Beere&P offers is meant to make work comp very easy for you, regardless if it's the fourth quarter or not. We pre-populate applications. We can work with groups directly in order to expedite the work comp process so that you can focus on the fourth quarter medical or any other issues you might have regarding any sort of medical group, RX claims, whatever. So even when a sale has been concluded, we still make the process easy because, again, we can do all the pre and post-sale servicing. We can keep the policy updated, service the group, and answer any questions the group might have. And if you wish, we can actually pass the information to you and you can forward the message onto your client, or we can work with the group directly and just keep you updated of any servicing requests or changes. More importantly, you can put in work comp business without needing an appointment. So let's say you have a one-off work comp group, you still want to service the group, but don't want to have to deal with an appointment process and long-term servicing for a one-off. We can just put the group, you can put the group through Beere&P and then we can just quote and service the group for you directly and then you can get the commissions on the group. And this is just some of the online stuff that Beere&P has. So for we have a Twitter account, we have a LinkedIn, so you can get quick updates on what's going on with industry. We also do have a YouTube channel where you can find useful videos just like this one. And we are currently working on a texting service where you can receive instantaneous updates for rate changes, network updates, et cetera, et cetera. And of course, we do have an email service. So this is the Q&A section. I just want to thank you all for joining me today. And again, a link with the recorded webinar will be sent within 24 to 72 hours. Before I do get to some questions though, there are a few FAQs I'd like to address, starting with, do owner-only groups need workers' compensation? And for that, the answer is no. Generally, owner-only groups do not need work comp coverage because if they have work comp coverage and then they file a claim, they're essentially filing a claim against themselves. However, if the group is a corporation and there's an owner with less than 15%, then coverage would in fact be needed because that owner is not eligible to waive work comp coverage in California. Another question that might come up a little more often than not is, do 1099s need to be covered by work comp? The short answer is yes. Someone has to give 1099s workers' compensation coverage. The only time 1099s wouldn't need to be covered by work comp is if they are a true independent contractor or they have their own work comp policy, in which case you don't need to include them in workers' compensation coverage. So let's see if there are any questions. Okay. So again, if you don't have any, if you think of any questions later on, please feel free to either call me or email me, and then I can get you a response ASAP. Otherwise, again, thank you all so much for joining me, and you will be receiving links to the webinar as well as some information momentarily. Thank you all so much for your time, and have a wonderful day.